Disappointing news on Wall Street. According to the Washington Post, the headline reads S&P 500 and Nasdaq face worst quarter since 2022 as new tariffs loom. The S&P 500 is down by more than 5% since the start of the year as trade policy uncertainty has plummeted stocks. Tyrone Bowman live. Welcome to the program on tonight. Let's get down to business and let's talk about it. According to the Wall Street Journal, the S&P 500 and Nasdaq indexes are on track to clock their worst quarter since spring 2022, as the Trump administration's evolving trade policies rattle Wall Street. Investors have struggled to find a foothold amid a barrage of new tariffs, which have been subject to repeated announcements and reversals since Inauguration Day. In addition, worrisome new economic data pointing to a consumer spending slowdown has reignited recession fears. The stock market downturn has entirely erased the short-lived rally that followed Trump's November election win, when investors pinned their hopes on pro-business policies such as tax cuts and deregulation. As of midday Monday, the S&P 500 was down by more than 5% since the start of the new year, while the tech-heavy Nasdaq index is off more than 11% for the year. The narrow set of stocks is off 2% since the start of the new year. The sell-off comes amid news that Trump is now pushing for more sweeping tariffs on Wednesday, which he has billed as, quote, Liberation Day, end quote, for the U.S. economy. Top Trump aides have previously said they would impose new tariffs on the, quote, the dirty 15, close quote, or the 15% of nations determined by the administration to have the worst trade practices. That proposal would target a huge swath of U.S. trade, but could pave the way for individual deals with countries and allow specific tariffs to be gradually reduced. In recent days, however, Trump has pressed advisors to return to his 2024 presidential campaign plan to impose a single universal rate on all U.S. trading partners as high as 20%. Without providing specifics, White House aide Peter Navarro said Sunday that Trump's tariffs would raise $600 billion per year or $6 trillion over 10 years, which appeared to reflect the universal tariff plan. And on Sunday night, Trump gave his first public indication that imposing a single tariff on imports from every country remains on the table. As the tariffs threat heats up, analysts say the stock market will hit significantly volatility, with much depending on what happens Wednesday. The April 2 deadline could be a major directional catalyst for more global markets in either direction, wrote Larry Tintorelli, Chief Technical Strategist for the Blue Chip Daily Trend Report, in a note to investors. White House officials are studying a 1977 law that gives the president emergency powers as a way to enact 20% tariffs on all imports, according to three people familiar with the matter who spoke on the condition of anonymity to reflect private deliberations. The White House has previously announced tariffs on the auto sector and on Saturday reiterated interest in tariffs on lumber and pharmaceuticals. Wedbush Securities analyst Dan Ives said he believes that the auto tariffs in particular will send auto industry into upside-down mode as the automakers struggle to reconcile their global supply chains with steep new import duties, upping the average car price by $5,000 to $10,000. Tyrone Bowman, never surrender, never quit.